The growth in the independent channel versus the wirehouse channel in investment advisory services, and in fact most advisory services, has been very pronounced over a long period of time towards independent channels. And inside that, the RIA space has been one of the fastest growth spaces, and that's continuing unabated. And it's just a better model, it's better aligned with the interests of the investor and the client, and increasingly people are seeing that as the right model for the future, and I think that's not going to change at all. There's a lot of evidence that the retail investors are starting to coming back. I mean, and I think they're watching the economy, they're watching what's happening with the equity markets, but we just introduced something called the Investor Movement Index, which measures inside our client base, are they getting increasingly bullish based on actual behavior, not stated behavior. And that's important, and in December it started to tell us that people, our investor base was getting much more bullish, and the most bullish they've been in a long time. That was first. So far in January, you've seen equity mutual funds turn positive every week so far this year. You've also seen in our book, every day except for option expiry day has been a net buy settlement, which means they're moving into the market. And thirdly, I think on top of all that, you're seeing the economy come along, and the S&P 500 was up 14% last year. It's up 6% year to date. So they're starting to see kind of returns in the equity markets, which increasingly is turning them more bullish. Right now, based on all of our trends inside our, both on the retail side and the institutional side, this is clearly an advice and guidance market. Yes, the retail investors coming back, but they're still cautious, they're nervous, and they want some help and hand-holding along the way. They don't want to get burned like they've been burned in the past.